The following information is available for ABD Industries for 2024. Sales revenue 750, account receivable beginning and ending, beginning of the year, January 1st and ending, allowance for credit losses. Allowance means the amount that you are not sure you can collect from your customers. Account balance is written off, which means that those amounts will not be collected because customers will not be able to pay those amounts. 200,000 of the sales were cash sales, which means that sales revenue written above for 750,000 includes 200,000 sales were cash, which means if we sell inventory for 750, of which 200,000 were cash, so 550 of my sales will be credit sales. My sales were 750. Of those sales, he mentioned here that 200 of them were cash. Those sales were cash, which means I collect those amounts already. So if we subtract 200,000 from 750, the remainder will be 550,000, which are credit sales, which means that I sold those goods and I didn't collect the amounts of the customers. The remainder were credit sales. He is mentioning here the credit sales, which is 550,000. Historical information, which means that the past information, our experience indicates that is telling us that 1% of credit sales will be uncollectible. 1% of credit sales will be suppose that we will not be able to collect those amounts. 1% of credit sales. The credit sales are 550,000. 1% of which, if we multiply it by 1%, will be equal to 5,500. So the answer will be, of course, the answer B or the answer D. 5,500. You have also to know that the amounts, and this way you will use in any other question, the amounts that are repeated in the answer B and the answer D is 5,500. While answer A is only 400 and the answer D is another amount is 7,500, which are not repeated amounts. So in a percentage of 99%, the answer will be B or D because the amount is repeated in the answer. So which one I'll choose? I'll choose the one in which the entry will be amounts that I am not sure to collect them are called credit loss expense, which is written in the debit side. Credit loss expense for 5,500. Expenses are written in the debit side, and the credit loss means loss will happen because I have sold the goods on credit. If we are selling goods on credit, we may not collect our money from customers. So it is called the credit loss expense in the debit side. And in the credit side, I have to write allowance, which means I'm not sure I'll collect this amount or not. I'm not sure. Allowance for credit loss for 5,500. And you cannot replace this words with account receivable. If you write here accounts receivable, it means that you are sure that the amounts will not be collected. You are sure that the money will not be collected, and therefore you decreases your account receivable. But it's not correct. So I'm going to write allowance for credit losses, which means I am not sure. I may collect the money from customers, but I may not collect the amounts of customers. So the answer will be D.